All right, so today basically I'll be showing you two things and the class will be basically just 30 minutes. So still on the advance, I showed you guys I showed you market structure, I um showed you market structure, bullish and bearish market structure, how to identify them, and I showed you basically what again? Candlesticks. Then I showed you how to identify the trend of the market. So yes, so today I'll be showing you I'll be teaching you on trend line and I'll be teaching you on support and resistance, right? Two four two three six five. Yeah. So now we're talking on support and resistance. So when it comes to, okay, let me start from trend line though. Trend line is basically is easy. I like this here. Trend. But resistance. And so this is number two, and this is number one. Okay, so basically, we were talking about trend lines. Trend lines are uh, um, in Forex, trend lines in Forex trading is basically a line that is drawn on price chart to show the direction of the market. So basically, use trend line to understand the direction of the market over a period of time, right? Then in trend lines, we have an uptrend and we have a downtrend. So in an uptrend, using the trend line, it's drawn by connecting two or more highs or lows, right? Is drawn by connecting two or more highs or lows. Then it shows that buyers are in control. Then price generally respects the support. So let me show you what so now this tool, you see this tool here, this tool, as I'm clicking on to you see the writing trend line. So it's used to draw the trend line, right? This is the tool that is being used to draw the trend line. So let's go to the chart and mark it up. Hold up. So in a trend line, let's write this. Trend line is used to trend line is used to sorry, direction. It's now to get the direction of it. But yeah, fine. For a period of time, right? Then it's drawn by connecting two or more highs or lows. It's drawn by connecting two or more highs or lows. And it's also drawn by connecting two or more lower highs. Yeah, it's also drawn by connecting two or more lower highs. Two or more, yeah. So now that the lower highs is in the case of, let me put this here. It's also Okay, so it's also drawn by connecting two or more lower highs. So now in this sense, if I showed you basically market structure, this is a downtrend, right? And this is an uptrend. So now I want to use your trend line tool. It connects these lows, these lower highs. These are lower highs. So in an uptrend, it connects the lows, higher lows. Sorry. So these are the higher lows. Remember, I told you guys higher lows while market is breaking structure to the upside. You have a break of structure to the upside. These are the higher lows. Then you use a trend line connecting, it's used to connect lower highs. So these are lower highs. Remember, if you watch the previous class again, showed the video, right? If you watch that, those are lower highs. This is your lower high, that's your lower high. So it connects all of this together that helps you identify the direction of the market after whatever I showed you. But yes, the previous class, I also used trend line to identify the trend of the market. So let's go to the chart. So now, let me break down to the 4 hours time frame. Okay. So now on the chart here, oh, on the charts here, now if I want to identify the trend of this market, now what does it look like? Look clearly, you can see market is breaking lows. It's creating it's breaking lows, breaking structure to the downside. So now you have a break of structure here, have a break of structure here, and you have a break of structure here. So now, basic understanding, zone, how is it showing invalid ID? But we are on the live here. Someone in the group chat just complained that she's clicking the link and it's showing valid ID. I'll use Google Meet, but Google Meet, I won't be able to record. So now this break of structure, market is breaking structure to the downside. So let me mark our BOS. I showed you guys how to identify BOS. BOS, breaking structure to the downside, right? So now if we are to use our trend line, what will we use our trend line to do? So now going back here, remember, um, let me take us back to the daily, the weekly time frame so that I can see where I'm at. So going back here, in an uptrend, for an uptrend, and basically, hope you guys know what an uptrend is. An uptrend is a bullish market. In an uptrend, it's drawn to by connecting two or more highs, two or more higher highs, higher lows, sorry. Then in a downtrend, it's drawn by connecting two or more lower highs. So now, judging from what we have drawn here, market is breaking structure to the downside, right? I've seen series of break of structure to the downside. So now if we have to draw our trend line, what are we connecting? We are connecting the lower highs. Is it? Yeah. Where is this to? So the lower, this is your lower low, lower high, sorry. Then this is your lower low. So now on a downtrend, we'll be drawing to connect our lower highs. Remember here too is a lower high, and here too is a what is a lower high. So basically, if you want to draw your trend line, this was is gonna look like. Remember, this is a tool to use to draw your trend line. So, um, okay, you're drawing your trend line, you're trying to connect this load. So now, what happens here? It touched here, touched over here. That's the origin. And here, most likely looks like a fake out over here and here. So now what I mean by fake outs is when normally on a trend line, after understanding drawing the trend, market usually does something like this. Once it wants to break out from the trend line, to do like go up like this, come back down, retest the trend line and start and break structure to break this high, create a higher low, start moving to the upside. So now the trend will now change to be bullish. But on this other end, instead of market doing this, it gave a fake out, like fake out in the sense that it pretended like it was going to change, but it didn't. Then it still continued the bearish move. So now, if you were to catch this, you would have been looking forward to catch this move from here. After the market broke, came back down, broke inside the trend line, retested the trend line over here, came back down. So if you're looking forward to sell, this is where you should have sold from. Please hold on, let me reply a text. Make 10. Okay. So practically, this is where you would have been entering from, catching the trade from here. Your TP would have been the break of structure and your SL be a bit below here, the confirmation, right? So now this is how you use the trend line to identify the trend. So with this trend line now, even without this guy, this break of structure here, here, this. So even without the break of structure, with this you can identify that, oh, this market is bearish. It's a bearish market. Why? Because market has broken structure to the downside over here. So now you have a bearish trend line. This is a bearish trend line indicating a bearish trend. Now, if you want to identify a bullish trend, still using your trend line, let me go somewhere here. I'll see something like that. This guy is overall. The overall trend for this guy is bearish, but let me check if there'll be situations, scenarios where you have pullback. But let me check. Okay. Yeah, it doesn't really have. Check. Okay, let's go to gold. Okay, so gold is forever bullish. Let me clear these drawings over here. Okay, now here is it. Break down to the 1 hour time frame. Break down to 30 minutes. Sweet. Okay, so now looking at this guy, hold on. One. Um, Looking for where the trend lines actually really connect basic version so that you guys can really get what I'm doing. Okay, yeah, so that's it. Basically, this is an uptrend. Why is it an uptrend? You can see now market has broken this high, break of structure to the upside, took out this high. There's a series of break of structures to the upside. While breaking structure to the upside, market is creating what I showed you guys. That's your higher high, and this is your higher high, and this is your higher low, higher low. So it's creating a series of higher high, higher low, higher high, higher low, higher high, higher low. So basically in this, you can use your trend line to identify the trend of the market. So by just drawing your trend line, where points at points now, note this, your where you're drawing your trend line should be a higher low or a lower high, and market should touch at least three times, two to three times. And there's one thing about trend line. I'll teach you guys how to trade trend lines. There's a rule for trading trend line that the third touch is always important. While touching a trend line, we're doing a trend line. Let's say market respected here one, broke, came back two. The third touch is said to be, according to the Bible version. Why I say the Bible version is like what we all know and what is all known generally in the world, that the third touch is the most effective and high probability trade setup or trade idea. Do you understand? So at this third touch, while waiting for market to touch the trend line the third time, you're waiting to buy. Let's say you want to risk like $100, or let's say you're risking $10 or one, or let's say bad as it be, gold is too volatile, but you'll be risking like 50 and above. So you want to risk that over here. So you want to risk that over here, then your target TP will be the next break of structure, which is this guy. Now, if you can look at this third touch here, what did market do? Market respected this third touch here. Respected the third touch, went up, came back down a bit, still went up. So now, if you are taking it straight, it won't have taken you out. So now, the third touch is always, how will I put it? It's a high probability trade. And let's say if you were to mark out, I'll show you guys support and resistance. You have to mark out your support and resistance. That would have been a perfect clean trade. This would have been this place here at price acted as your support while taking the trade, and boom, TP. So that's for an uptrend. Mind you, this is for an uptrend, right? This is an uptrend. We have just used the trend line to indicate an uptrend in the market. An uptrend in the market is basically, wow, what's really happening? Okay, someone is trying to call me. An uptrend in the market is basically a bullish market structure, like I showed you guys yesterday. Uptrend is basically a bullish. You guys should get used to these terms, but to help you. A bullish market is a bullish market. Well, let's say, wow, okay, okay. Bullish market structure. Sorry, people they get calls and it's interrupting what I'm doing. Okay, so moving forward, let's go to GPCHF. So let me text this person now in the class and I'll call him back. Sorry guys, hold on. Okay, sorry, I'm back. So now moving on, let me show you this. What I was saying, this is an uptrend and a bullish market structure. So going to GPCHF. Sorry, I have a meeting, and that's what you're calling me. So I have to rush up. Can you guys hear me? Please, if you can hear me, indicate. I don't know, my network is having issues.
I can hear you.
Okay, good. So going over to GPCHF, it's not here. Okay, it's here. So going back to GPCHF, with this, you can identify that this is what? This is a bearish market structure. This is a bearish market, bearish trend, or a downtrend, whichever way you want to put it. So now this is a downtrend. You've used your trend line to identify the trend is a downtrend, or you can call it bearish trend, bearish trend for market. A downtrend, bearish trend, or a bearish market structure, and which one? We're going over now, we're going over to support and resistance. Support and resistance. Support and resistance. Do you guys have any question? And support and resistance, I'm supposed to give you guys assignment after every session, but once I'm done recording this, I'll give you guys assignment. Also give assignment on the previous sessions we had so that you guys will get to know all these things. Because if I'm just the one explaining them and you don't get to go to the chat on yours by yourself to check out all these things, you won't really get a clear view of what I was saying or what I'm talking about. Right. So I'll give assignments so that you guys can go on the chat. Hope you guys have trading view on your phones or systems or wherever. Hope you do. So now moving on, support and resistance. Support is a price level where markets tends to stop falling and stop it is an area that indicates strong buying interest. So basically, let me put it for you here. Mm, support, support zone or level. The support zone is Hold on, let me put this here. Support zone, the support is a price level where market tends to stop failing and bouncing and bounces up. It's an area of strong buying interest. Buyers step in and prevent price from dropping further. Acts like a floor of underprice. So the support is a level that holds price, that price doesn't break below, right? A support is a level that holds price and price doesn't break below that level. Then your resistance zone or level, um, hold on. The resistance level is a price when markets tends to stop moving down and tends to stop moving down, and it is an area of strong selling pressure. Now, I'll start, since we're in a bearish market structure, I'll start with the resistance first before moving to the support. Mhm. Here is it. The resistance is a price level where market tends to stop rising and moving, stops rising and starts moving down. It's an area of strong selling. Um, is an area of strong selling pressure, and sellers step in to prevent the market from moving higher and acts like a ceiling above price. So please, sorry, can you guys just give me 5 minutes? Let me attend. Let me tell them that I am on. I've told them I'm on. Let me just pick presence. Then after that, I will come back. I'll say, okay, okay, okay. Let me just declare my presence in the meeting. Then I'll come back and host the second live. So let me stop here at support and resistance. Then I'm coming back. Just give me at least 2 minutes. It won't even take up to 5 minutes. 2 minutes. Let me just declare my presence. Then I would send another link. Then we join. We finish up. We round up. In the next 30 minutes, I'm done. All right. Thank you, everyone.